Is that guys, we're going to go live. So
All right.
I'm going to set.
Let's not discuss it.
So I'm going to make a start now. So good evening, everyone. My name is Simon Misiewicz. I'm from the Property Experts panel, and welcome to the 1st of March 2021. And if my slides confused you last time around, it said 2020. So thank you so much for Teresa for bringing me up to this year. Welcome, everyone. Tonight is the event whereby you can ask your property investment questions, and we will give you the answers as best as possible. I have a nice surprise. It is our birthday this year, so I wanted to give you all something to look forward to. And that is to look forward to the whole thing of it's across the board. So we are live streaming, not just on YouTube, but we are also streaming on Facebook, Twitter, and eventually, once LinkedIn let me in, it'll be on LinkedIn as well. So without further ado, I want to give everyone an opportunity to say hello whilst I just make sure all my settings are working correctly across all these multitude of platforms that we are now on. So if you can make a good start first, Bronwen, and then I will mute myself and let everyone else get their say of who they are.
Of course. Wonderful, Simon. Thank you so much. And it's great that you're hosting this. So go play with your settings and we'll carry on and introduce ourselves. So yeah, this is the 13th, would you believe, episode of Ask the Expert. My name is Bronwen Vearncombe and I'm a property investor down in Hampshire. And I help other people learn how to invest in property and to understand all the different strategies and the fear and overcoming the fear factor. I also have a book, and it's also today is the anniversary of my book being published, the first anniversary. So that's something else I'll talk about later. So yeah, it's brilliant. We've got a new guest today. So we're now 7, would you believe? But let me move quickly on to Teresa.
Good evening, everyone. Yes, I'm Teresa Kaczmarek. I'm here representing the National Residential Landlord Association. I am a landlord, HMO landlord, and I've been working for the NRLA for ages, about 7 years now. So I'm here tonight just to help answer any questions, surrounding renting and landlording. And I have got a brief update on some of the topics that are prominent in the private sector at the moment. And I will pass on to Simon Hodgson.
Hey, right, thanks very much, Teresa. Right, yeah, so my name's Simon Hodgson. I've been involved in investing in property for the last 20 years. I started out educating myself with a guy called Russ Whitney, who was an American who had a book that wasn't massively updated for the UK, but he advocated taking on loads and loads of debt, credit card debt, to buy houses. I'm not sure I would advocate that right now. And I kind of got involved and have been ever since then. Brokers didn't really know what they were doing. Residential brokers didn't really know how to help investors, and that's really where I learned how to effectively teach brokers back then what to do, and why I then became a broker myself. So from there, I've built up a portfolio, lost it through the credit crunch, managed to rebuild back up again, as you do. Easier the second time round. Yeah, and I predominantly work with investors, helping them expand their portfolio, recycle cash, and use investor borrowings to grow your portfolio. So that's really me, whole of market mortgage broker. Yeah. Who should we go to next? Let's go to the lovely Mr. Tim Bishop.
Thank you, Simon. Thank you, the extremely lovely Simon. Yes, hi, my name's Tim Bishop. I own Banana & Bishop Solicitors. We're a full-service law firm, but we specialise in a number of areas. In particularly, we have a specialist property investor team acting for clients nationwide, whether it's conveyancing, litigation, or any other issue that investors deal with. We also have a highly specialist lease extension team. They do nothing but lease extension, enfranchisement, and right to manage cases with blocks of flats. And I think they're possibly the most specialist and largest team in the country. In addition to that, however, I'm also an investor and developer myself. I've experience of HMO, commercial conversion, SA and buy-to-let, and I'm just in the process at an early stage of setting up a SAS. For those of you who aren't aware, that's a small self-administered scheme, a pension, which means I can invest in commercial property. So that's my new project for the next few months. And also I'm looking to significantly increase my portfolio sometime later this year. So there you go. Tim Bishop from Banalick & Bishop, solicitors who really understand property investors. And can I also add, we always are more than happy to provide free initial phone advice for any investor on any aspect of law. So thank you for that. And now over to the even more delectable and delightful Paul Hilliard.
Thank you, Tim. Lost for words. Yeah, my name's Paul Hilliard. I'm a long-term property investor. I've been now for 30 odd years. Oh, wow. Started when I was very young, obviously. What I do is I specialise in almost everything in the property market. I started off with vanilla buy-to-lets and then graduated to bigger buy-to-lets and then into HMOs and then into commercial to residential conversions. And then I've tried rent-to-rents and also service accommodation. So I've got a dozen service accommodation units, mainly in the Midlands. So I won't use the term holiday lets because not many people want to come to Birmingham or Warsaw, but I do not understand why, but there you go. But I'm also operations director for a company called LNPG, and we are the UK's biggest buying group for landlords. And what we do there is that we've got together with nearly 5,000 other landlords, and we go out and negotiate your best prices for top quality products. So we deal with Worcester Bosch boilers, we deal with Johnson's paints, we deal with Baxi boilers, we deal with Honeywell, and AO, Currys, everyone, Jewson's, everyone in the marketplace who's substantial, we deal with. So if you want to learn more about us, go to the LNPG website, obviously after the meeting, and learn more about us. You know, it's definitely worth it. Will save you. We guarantee to save you your membership every year, or we give you a free membership the following year. But you've only got to buy a boiler, and that's your membership done. Oh, sorry, I forgot to mention Magnet Kitchens. So, making his debut at long last is Mr. Wayne Norcliffe. So over to you, Wayne. Welcome.
Hello, thanks for having me. I'm a property experts newbie. So who am I? Well, I started out as a bricklayer in Manchester many years ago, worked in the building trade until I went to university. And now I run a surveying business on the south coast of England, which is mostly doing pre-purchase surveys, home buyer reports, building surveys. However, I have worked as a property manager for the likes of HSBC, National Car Parks, and other big organisations managing their national portfolios across the UK. So I have experience of doing commercial and residential work, including being specialist in car parking. And I'm currently just finishing off my external wall cladding survey qualifications to help other people out who are struggling with selling flats because of potentially combustible materials. So yeah, so I'm currently at Castle Surveyors, and you want to find out more, you can go online where my website is there and you can find out all about me.
Perfect. I think that's everyone done. So as we say, we are live, and my present to the panel members is to get us to far afield in terms of Twitter. I've just gone onto Twitter. If you're looking like my neck's twisted the wrong way, it's because I'm looking at virtual desks all over the shop. So that's really interesting. And I'm also navigating the questions for tonight as well. So if you've got any questions, whether you're on Facebook, Twitter, LinkedIn, or on YouTube, you can post your questions and I will see them in the chat box. And in fact, I can see lots of people already posting across all these multitudes of platforms. So thank you ever so much. Keep your questions coming. The way that we do this is I have a mobile phone and I will be looking at those questions. So if you have questions, feel free to post them. We are live, so I will get those. However, in the meantime, we do have our PowerPoint presentation to go through to our weekly or our monthly updates. So hopefully everyone can see my screen now. And I'm just going to test that theory. Yes, I think we can see my screen, so all is good. So the first thing I want to bring to your attention is this Wednesday is the budget announcement. Not that I needed to remind anyone. So I will be posting various things across LinkedIn, Facebook, Twitter, and indeed our own website and this channel on YouTube as well. So I will be live several times on Wednesday, and I'll be doing live sessions each evening as we talk about something new. So I won't talk about that tonight because, quite honestly, I do not know what Rishi Sunak is going to announce. And anyone that says, what is he going to announce? Let me just answer that for you now. I don't have a Scooby clue. Okay, so with that done, I can move on. So over to you, Tim. I think you're on mute.
Right.
Here.
Yes, I'm now unmuted for once, so you can actually hear me. Right. As those of you who've been here on previous months will know, I provide a monthly update of our conveyancing statistics. The principle is it's bang up to date. So in fact, as soon as somebody instructs us, we open a file. So these are very rapid figures. Figures you get, for example, from the land registry only reflect completions and a month's sort of date anyway, but ours literally are bang up to date. So as you can see, in the last 12 months, there's been quite a shift indeed. We started off in March when it started dipping. April and May, as you see, it virtually died. But as you can see, then it went up and hit a max in September, October. Well, as expected, went down for Christmas. But what's interesting, although it's dipped again following an increase in January, it's still above the average. And in fact, bear in mind, that average is higher than it is usually for us because the rest of the year has been so high. So I think the fact is that despite the fact that everyone's rushing to get in by the March deadline, there's still a lot of activity in the market. And the fact is, despite the fact we've gone through the biggest recession since 1708, our housing prices don't appear to have been hit, nor is activity in the market. Now, we're seeing a little bit less work, as you can see, and that certainly backs up my conversations with estate agents, who are sometimes a couple of weeks ahead of us in the game, and they tend to confirm the same, that there is definitely a decline, but it's certainly not dying. It's a very, very active market still. And so there's our figures anyway on the latest kind of figures we're coming through. So it's still very active. So that's the first slide. Oh, and that's the second one. Here we go. This is my favorite business quote. It's from Warren Buffett, the bloke on the right, who is currently the 7th wealthiest man in the world. And just so you can read it in case it's a little bit unclear on your phones, no matter how great their talent or efforts, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant. Absolutely spot on, Warren. And I think that's really true of the property industry. I think so many people come in and want to achieve everything overnight. I think there's a great danger doing that. I think if you're in property, long term is the safest bet. We have no idea what the next year is going to bring. We have no idea what Rishi Sunak's going to do. We have no idea how the market's going to recover. So I think it's very much a long-term bet. And that's the wonderful Warren telling you about how not to rush your business. Can I just go back on one thing on Warren Buffett and merely say, interestingly enough, he's made over half his money, most of his money, since he was 50. So for those of you who think, oh, I've left it too late, well, I'm 59 and Warren was 50 before he really started getting going. So on to one more thing.
There is hope for Paul Hilliard again then.
No, oh, that's really old, you know, not that old. Next slide. Thank you, Secretary. Right, this is exciting. These are our legal masterclasses for property investors. And it's very simple. These aren't supposed to replace a law degree, and they're certainly not intended to replace a solicitor. But our theory is forewarned is forearmed. If you know the right question, you know the right information, you can ask the right questions. So we are producing a series of short, snappy, live legal masterclasses and on a variety of subjects. The first 6 have been booked in. We've got another 6 planned. And if people have got bright ideas on what they'd like to know about, I'd love to hear from you. The first one went last week and was very good. How lease extension can make you money. This week, we've got finding the right solicitor for the right job. Then we've got your legal 6-pack, and then doing a property deal, 7 mistakes you must avoid. Possibly the most interesting for some people are the 2 on joint ventures. One thing that never ceases to amaze me, you go on courses, all the education you get, they talk about due diligence, but no one ever, ever, ever tells you what due diligence actually is. So what we thought, we will come up with a due diligence checklist, and we've spoken to IFAs and accountants and banks and insurers, and we've come up with a list. It's not comprehensive, but it is, as far as I'm aware, the only due diligence checklist, and that will be its world premiere. So book in for that on the 25th of March. And secondly, there's so much to talk about with joint ventures. We're going to deal with the paperwork, things like loans and in particular shareholders agreements and partnership agreements. And right at the bottom, you'll see the address. You can click on those. They're all free. So that's it, really. Legal masterclasses for property investors. Helps to cut down risk and increase your profits. Thank you very much, Simon. Back to you.
shall we go over to Teresa now? Teresa, over to you.
Sorry, I was on mute. Okay, so that just some highlights in the private sector. There's a ban on bailiffs still enforcing warrant for possession. So that ban has been in for some time now, and they've extended it again to the 31st of March 2021. There are exceptions if you are going in through possession on serious rent arrears or antisocial behaviour. You can still, those kind of warrants can still proceed. And to be fair, that is what most landlords are going in with anyway. The majority of possession cases are relating to rent arrears and antisocial behaviour. So that is that. But needless to say, the whole possession process is quite a lengthy process currently. The next one is there's a census that is being launched on Sunday, the 21st of March. So this is across, the whole of the UK for all the people that live here. And the NRLA are encouraging everyone to take part, because the information that is inputted into this census forms the decision making for policymakers, planners across the country. So when they're looking at the infrastructure, looking to strengthen it or make changes to it, they go off this type of data. So we are encouraging everyone to take part. I mean, I got a card through the door to say it's coming, and it'll either be paper or online, digital way of, sort of inputting into that census. Then just want to give an update on some of the podcasts and webinars that the NRLA are holding. So we do weekly webinars. So the latest ones that you might be interested. So the latest podcast, is boosting energy performance and the unfurnished debate. And our podcast is hosted by our Chief Executive Officer, Ben Beadle, and Richard Blanco. So if you've got a bit of spare listening time there, you might be interested in that. And you can access that via the NRLA website if you go to the news tab. And then we do have many webinars. So there's a whole host that you could access previous webinars gone by. But the two latest ones are High Court enforcement during the pandemic. So that goes into the nitty gritty of how the process is currently working. And we have got our own budget special. So if you're interested on what NRLA going in with, what they're asking the government for pre-budget and what we are predicting, then please do have a listen to that. And that's my update. Thank you.
Teresa, just keeping on you, just to get this fired off for you, because this is a live session. So clearly people are going to be listening to us all and asking us detailed questions. BM has asked this is Brian M. Ooh, we might have Brian May on in this show. That'll be fantastic. We can get him live. He can do a guitar piece for us. Brian's asked, that's insulted him, he's off. So that's him gone. Can the landlord fill in the consensus form for HMO tenants? That's obviously to you there, Teresa.
Yeah, I don't know. I mean, the census is for each individual person. So everybody will be able to input into that. So that's the landlords, the tenants. You won't be able to, I'm not sure about the exact questions, but maybe we'll ask, what rentals you have, but it's specifically about information about yourself and your household. Okay.
I've got a few more questions for you, but we'll carry on for the updates for now. Not sure why I've done this text, but over to you, Simon, about precise mortgages. You're on mute, just so you know. Let me just unmute you. Hold on a minute.
I thought I'd unmuted myself. Did you, Simon? Are you muting me off again?
Well, you do talk a bit.
I know. At least let me get a word in,
And now, boys, come on, behave. I'm here this month.
Right. Okay. So just really within the world of lending, there's a degree of positivity going out there at the moment. So as we were approaching the stamp duty cut-off period, the holiday end period of the 31st of March, before we really knew anything that was going on in terms of an extension, which has been widely touted as being extended into June now. What I'd seen, first of all, were Precise drop their rates. Now, these rates here are really key because they are rates that have not been seen since before the first lockdown. So they've been absent for the last 12 months. It's the cheapest limited company mortgage out there by quite a stretch. And it's what it's effectively saying is Precise are looking to get money out of the door and lent ahead of other lenders, which really tells you how they're feeling about the market space. The 5-year fixed rate is also quite competitive. It's not quite as competitive as the 2-year product, but yes, great. And as a lender, they can do a bridge into a term product. So sometimes we can flip them from a short-term refurbishment into a term product. So that's Precise. We're going to move on now to Lend Invest. Right, there we go. So Lend Invest also did something that was quite unexpected, to be fair. So they launched some new 80% loan to value products into the market space. Currently, in terms of 80% loan to value products, there are around about 79 or 80 products at the moment. Pre-lockdown 1, so this time last year, there were nearly 400 products. We're still a long way off where we were, but what Lend Invest have done is not only have they brought out the 80% product on normal standard single lets, but they've also brought it out on HMO. So it's the only HMO product up to 6 rooms that will lend up to 80% loan to value. And they've done that in this run up to what would have been the end of stamp duty. They've also extended large HMOs. So large HMOs have been a little bit more difficult to refinance. So they'll go up to 15 bedrooms now. But on some of their products, they've gotten up to 0.25% cash back on completion. So another great one. And moving on, if we can, Simon, next one. Shawbrook is the last one. That's brilliant. Yeah, if we can go on to the text. So this is another lender that, again, has been really bullish. So what Shawbrook did through lockdown 1 and then into the summer was really peg back their loan to values. They brought back their loan to values to 75% loan to value, but they did have a refurbishment product called a light refurb product, which lent you up to 10% of the value of the property as long as you could produce a schedule of works to show that the works needed to take place. And they actually gave you that money on day 1, not after you've done the work, but on day 1. So you actually got 85% loan to value on completion. They just relaunched that product again. So yet again, that tells you how lenders are feeling about how 2021 might pan out. Now, it's not individual advice, obviously, and there's a degree of uncertainty within the market space. And if you'd asked me if these guys were going to do this at the beginning of the year in January, I'd have said it looks very likely. However, it has happened, and we need to take that as potentially an indicator that with good management within the sector, that falls that we were expecting, large falls, might be less prevalent than we first thought. Anyway, there we go. That I've talked far enough. That's more than Simon's ever going to give me for the whole night tonight.
I was going to add, actually, I'm allowed to add something to that, Simon, in that you've also got the new first-time buyer guarantee, government guaranteed mortgages, which is going to boost that sort of movement at the front end of the chain. So it's I think
really, there's a really critical area where borrowers just haven't been able to borrow. Even 10% deposit owner-occupier mortgages for first-time buyers have been largely non-existent, and those that do exist have been terrible interest rates. So the government has been really good in identifying that they need to put a product in place to help that side of the market, because there are many sectors to the market, and if they aren't all working in unison, you're right. Sorry, I shouldn't have mentioned that one.
So over to Paul Hilliard. Come on, mister.
Hello. Right. Just to remind you all that LNPG is open for business, and the vast majority of our suppliers are open because in the main they are servicing critical businesses. So most of our suppliers are going strong. So, for example, Johnson's Paints, we've got some deals for the month only of March, and a coloured acrylic durable mat is only £48 for 10 litres. Now, if you were going into Johnson's tomorrow as a non-member, you'd be paying over £100 for 10 litres for white only. So what a superb deal that is. Stoneway Matt is £30 5 litres. Wolseley offering Honeywell Smart programmable thermostats for only £108. All these prices include VAT, just to remind you. And Jewson, we've got 3 special deals off them this month. Multichem Cement at £4.75. Hanson Cement at £4.06, and then the Fast Set Prosfix at £4.69. The one thing I forgot to remind everyone of is that don't forget to join us on Wednesdays at 6:45 for the lock-in events. And this Wednesday, we've got a guy called Ant Lyons coming to talk to our members. I think most of you will have heard of Ant, who was the co-founder of YPN magazine, which, again, it's a must for all property investors. So if you're interested, I'll post in a second, but you need to go to bit.ly and it's LNPG LI 29. That's our 29th event. So see you on Wednesday night. Thank you.
Paul, if you want to put that on the chat box within Zoom, I will then repost that into our multi-platform.
Brilliant.
So we can share that as well. So I'm going to share that out. So that hopefully is the last slide, isn't it? Into some announcements. So what I'll do, I'll stop the share now because last time I didn't do that very well. So this is where we have our Q&A session. So to kick start, there was one particular person I want to, and it's a frequently asked question, so I'm going to answer it again just to get us in the mood for it. It says here, I think it's Lilla Thompson says, is it a good time to be a buy-to-let landlord given the recent tax changes? To be honest, I'm not sure if we're in Thursday, the 4th of March, but I'm not aware of any new tax changes that's come afoot. But let's get over to you, Bronwen, and to Paul Hilliard. I mean, irrespective of what tax changes come afoot, property for me is still a good bet. What do you think?
Well, absolutely. And I think, no matter what's happening in the market, you can adapt and you can understand. And through asking experts, you can understand the impact of various changes. So since I've been investing, in 7 years, there have been major changes. Section 24 is one of them, where you can't offset your mortgage interest. There's a way around that, and you have to learn and understand. So the key in investing is absolutely take action, start learning, start understanding how property can create an income for you and give you freedom in the future. So I would not hesitate, and I wouldn't worry hugely about all the media negativity and hype. I would talk to the experts around you, book a chat with me for half an hour, read my book. I think for all of us investors, and we all invest in property ourselves, we understand that it is an asset that gives you value, as long as you know how to do it and as long as you know the risks. So yeah, that's my view. Start learning now, start investing now. The best time is now.
Over to you, Paul.
Over to me. Well, I'm sorry, Bronwen, I'm going to disagree with you. The best time to invest was 20 years ago or longer. But if not, if you can't do that now, do what Bronwen said. Invest tomorrow, but get yourself educated first. Property, I would suggest. I mean, I was in corporate when I was in corporate life, and I've been out of corporate life now for over a dozen years. I was a, if you like, high-flying finance director, and I was looking to supplement my income and the way, and my pension, which I was concerned about, because obviously I'm a lot older than I look, unlike some other members of the panel. And I was concerned that my pension wasn't going to provide for me. And I saw property as being that outlet to provide me with a future pension fund. But not only did it do that, it allowed me to escape from the rat race a lot earlier than than my pension time. So definitely worthwhile looking at property. It is more challenging, but that's why it's so much more important to get the right advice, investment education, and obviously, as Bronwen said, by all means, speak to her. She can point you in the right direction. So yeah, go for it. I would definitely recommend doing it. And like most of the other members of this panel, I am looking to invest further during 2021. Over to you, Simon. You're mute.
Wayne, did you want to say something on that matter?
Yeah, I thought I'd add, because I was asked this question recently by somebody. Is it a good time to invest? Yes, any time's a good time to invest if you can afford to invest and afford with the risks that go with any kind of investment. But what I was going to add to that was, and add to what Bronwen and Paul have both said, is that there's opportunities out there still. I think you just have to be smart and clever and seek out those opportunities, try and think ahead of the pack, try and look beyond where people are today and think about where it's going to be tomorrow. For instance, I predicted last year when the election happened, if the places to start looking were where the Tories took seats from Labour, because that's where they're going to invest. And as it so happens, you can buy a house, for instance, in Bronwen for £30,000 still, rather than where I am, which will cost you 300. So there's certainly opportunities out there. Try and think ahead. HS2's got some opportunities coming along, as have other places. So look at those. And you're right about the taxes, and I think it's fair to say that the government have over the years realised that there's loopholes and there's things that they need to close from all different angles in terms of landlords, because there have been over the years some bad ones. So it's right that the government have clamped down on those. But the question about tax or costs shouldn't really impact you, in my view, as an investor, other than how it impacts the yield. So effectively, if you can factor in those costs and still come out of it on the upside, then it's a sound investment. If you can't, then obviously any investment isn't wise. Just thought I'd add that in.
No, it's good. It's good. That's and thanks for that feedback. It's great to have you on the show, Wayne, and adding in such great value, which I'm sure you will do as well in later shows. There's been a question. Tony asks, I'm currently living in rented accommodation and in my late 50s, which is much earlier, which is still very younger than our own Paul Hilliard. What he's saying is, I would rather not. I still stay in rented accommodation. Good income in my retirement. My question is, do I take the money out of my pension? Because there's a tax-free allowance over, obviously, people that are over 55, as Paul Hilliard will know. But the question is, should you take money out of your pension? I'm going to ask, let's get a couple of different people on this. I think it would be good to get Tim Bishop, who is much younger than 55, so whether you'll do that and compared to Paul. And we'll also speak to Simon Hodgson. So what's your views on pensions versus property investing?
Well, first of all, thank you for saying I'm under 55, though they may well get you under the Trades Inscriptions Act. So that's number one. Secondly, should you invest in a pension? I think the general problem here is they're asking for general advice. And the individual advice works for individual people. So, for example, I am now investing in a Sas. Now, arguably, small self-administered scheme at 59, actually 59, not under 55. Arguably, you could say it's too late. But actually, in my particular circumstances, I've spent 35 years building up my law firm. Now I can invest in other ways, hence property, etc. So I think the answer is it really depends on your circumstances. If you're looking for long-term investment to pass to family, as I am in terms of a Sas, that's very different from needing that to produce your pension. So I'm going to bottle that one and say, actually, it depends on your circumstances. And I would speak to an excellent specialist property tax advisor. Simon, do you know any?
Do you know what, funnily enough, yeah, there's one or two out there that are definitely worth a chat with, for sure.
So over to you then, Simon Hodgson. What's your views?
All right, okay. So obviously this isn't individual advice in any way, shape or form. It's an opinion. I guess with any kind of investing, if you're looking to spread risk, yeah, it would be wise to perhaps do both. Do a bit of property investing, do a bit of pension investing, and potentially your pension can then sub-invest back into property. So there are crowdfunding platforms which you could use your pension to invest in to get a guaranteed return. You would need to take specialist advice on this, but some areas of commercial property are still worth an investment in, and you can use your self-administered small scheme to do that. But also, the stock market, if you are comfortable with investing, that's still a great place to make some money. I know our very own Simon M made a good return on a short-term investment, or relatively short-term investment in the stock market at the beginning of the pandemic. So yeah, absolutely.
Wayne, just to get you back on, actually, because you mentioned about commercial property. So, I mean, I've always felt that commercial property was one of those investments that people don't do enough of. What's your views?
Private people don't do enough of it, other than through their pension providers, obviously. I think it's fair to say most pension providers have got an element of commercial property in that portfolio. A little while ago, I probably would have said it's an area to look at. Based on where we are at the moment, following the pandemic and the consequences that none of us yet know what's going to happen as a result of that. But I think it's fair to say the property market's changed hugely as a result of the pandemic. Retail, I think it's fair to say, was going to be severely impacted. And that's me speaking quite softly about it. I think it's going to be carnage on the high street, even more so than it has been. And it's going to, if not carnage, there's going to be certainly changes in high streets. So retail, struggling. Commercial properties in terms of industrial and offices. Well, offices, as we know, have changed because of the working patterns, working from home, etc., etc. I think at the moment, I think you have to hold fire and see where the market goes if you're thinking of investing in commercial property, unless, having said that, you're thinking of buying commercial and flipping it into a different use. Now that's a different thing altogether. Obviously, picking up an old office building for £1 a foot or whatever it is, you might be able to pick it up for capitalised, and then flipping that into a residential property with all the planning benefits that are currently in play there. Now that's a completely different animal. But I don't think that's what you were asking, Simon. I think you were thinking more of buying a commercial property to rent it out and gain a yield from that. Again, as Tim says, investment is personal. And every opportunity is a good opportunity if you do your homework, if you run the numbers, if you take good advice from people on this panel or wherever you need to. It's a good investment if it is, but it's individual to the person, their circumstances, and in particular the property. But at the moment, generally speaking, I would be concerned about putting money into commercial, other than specialist areas, maybe hotels and serviced accommodation.
Thank you ever so much, Wayne. That's brilliant to have, again, that's just a touch of difference in terms of perspectives. So it's always nice to see that. Someone's asked about Sas Pensions. Unfortunately, we're not going to be able to talk about Sas Pensions. I'm not a specialist in this area, and it's very much one I would say that is regulated by the PRA. So I would do some research on that. And that, sorry, Mike, that's from your question. So apologies for that. From the Sas Pension perspective, Bronwen, do you have any thoughts on that?
Yeah, so I have a Sas. I've had a Sas now for 4 years, small self-administered scheme. It gives you flexibility. It gives you the ability to invest your pot of money in certain areas within regulations, highly regulated. And it is very specialist. It's an entrepreneurial pension. You need to have a limited company. You need to have a business. You need to understand how to invest it. So it is complex. It's highly complex. But if you're already in property, or you're learning about property and you're thinking about expanding your portfolio, it's always, or you've got another business, you're self-employed, it's always worth considering. But as we've all said about pensions and Tony's question, it's all down to your specific circumstances. Is it right for you? And you need to get specialist advice. I'm happy to refer you to people, because I shopped around quite heavily to get advice before I did mine. it sounds like Tim's getting his up and running as well. So, you know, we'd all be happy to refer you to people that we've spoken to. But yeah, I think it's the best thing I've ever done, to be perfectly honest, because my pension doesn't die with me. It doesn't, half of it doesn't just go to my husband and my kids. It's inheritable, and it's a massive asset for me now. So, and I can use it to invest in property. So yeah, we'll move on from SAS, I think now.
Just to finish off on that point, actually, SASs and pensions generally are outside of your inheritance tax. So if you are worried about your inheritance tax liability in due course, then maybe investing into pensions would be a good thing. Sue asked a question about capital allowances. What are they? When can they be claimed? Capital allowances used to be a great thing for HMOs. So capital allowances is you've got your building, then anything else that you shake falls to the ground. Then those items may be furniture, there may be fixtures, even wiring, plumbing, that kind of thing could shake out of the building if you like. Capital allowances could be claimed on those particular assets, and it would give you a tax relief on the amount that you've invested in those goods. So companies like Six Forward is a company that we use for capital allowances. They come out, do a survey report for you, establish the value of your bricks and mortar versus the plant that sits inside of your properties, and then you can put the capital allowances against your tax return. So it's a very good way of reducing your tax liability. It's probably more prevalent and more efficient in a self-assessment tax return than a limited company, if I'm honest with you. But you can certainly use them. I did say that HMRs used to be used, but since 2003, HMRC have pretty much said that capital allowances on HMOs are not going to be allowed for many different reasons. Capital allowances can be used more on holiday lets. So if you do have holiday lets, you can get some great capital allowances. We've got lots of our clients that have got £40,000 worth of tax reliefs. So it's worth having a look at that side of things.
Simon, can I come in on that one very quickly? Just with a personal story to show the importance of getting the right advice. And I'm really pleased you refer to your capital tax advisors. There are a lot of accountants out there who think they understand capital allowances, and I'm afraid I don't think they do. I'm delighted to hear Simon, he talks about going to a specialist. I'll give you a personal example. I bought a commercial building about 10 years ago. I bought it for 330 grand. And I was told by my accountants at the time, there's no point claiming capital allowances. You might get a couple of £1,000s back and it'd all go in fees. So I did nothing. I followed their advice and I got this in writing. I then changed my accountant to a specialist property tax accountant. And the first thing he said is, have you claimed capital allowances? I said, no, I was told not to. So I then got in contact with another specialist agency, and there are 2 or 3 really good ones out there. And within about 4 or 5 weeks, I had a check back. And after I paid them their £2,000 fee, I ended up, I think, with 19.5 grand cash within 3 or 4 weeks, non-taxable. And that was on a building worth £330,000. So this was significant. And I think actually I've got a possible further claim. Now I've converted it to serviced accommodation. So the point is, don't always rely on generalist tax accountants. You need specialists like Simon. It's really important to get the right advice because property tax is specialist and this is an even more specialist area, but there are serious monies to save from carrying investors.
Yeah, absolutely agree. The capital allowance can be used very effectively if you do the right thing. And indeed, if you're making profits. I do see some capital allowance claims being made when they've got lots of carry forward losses. It just doesn't make sense to do it, to be fair. So you do need to time it as well. Actually, there's a question for you, Tim. Peter asked, if a friend wants to lend funds for a deposit, do I need to draw up an agreement? And I guess I'm talking loan agreements here.
To be honest, I didn't catch you all because you broke up in part stages, but I think you're asking me, is there a loan and should that agreement be put in writing? Absolutely. If that was the question you asked me, I'm guessing here. Yeah, absolutely. I think there's, and I've said this on a number of these other shows, and I'll continue to do so. The great risk with the property community is we're all entrepreneurial. We like the deal. It's exciting. And things like legal contracts just seem like boring paperwork to put off or not do at all. And I can share some horror stories about people who haven't done this properly. So yes, any kind of agreement, although it can be oral, should always get in writing. And something like a loan agreement, absolutely essential. I'll give a horror story. I may have shared it before. I had a phone call about 4 years ago from someone I didn't know who had got hold of my name somewhere. And she said she was a bit worried about her investment. She'd invested £100,000 in a property and she was concerned about her health and her husband's health. So she rang the bloke up to talk about it and said, could I have something in writing just to reassure my husband? At which stage he put the phone down. She'd given him £100,000 cash, never had it in writing. I don't know what happened in the end, but that's the kind of horror story, how daft people can be. So don't do that. You need a proper written agreement that's written by a solicitor, not one that's downloaded online, because some of those won't be right for your particular circumstances, but you need a bespoke loan agreement. You can use it again and again and again, perhaps, but you do need one properly drafted by someone who understands the property world.
Okay, that's good. Actually, another one for you. You're very popular tonight. Based on last session, when we had to share out your link about 5 times for your masterclasses. I have shared those links. I've shared Bronwen's links. I've shared Paul Hilliard's links. I need just to get yours links, Teresa, and I'll share those as well. So if you can put those on the chat box within Zoom, I'll relay them back out. I feel like I'm just your personal secretary, guys. I've got to be honest with you. So the question came out is, given that lease reform that has been announced by the government, how soon do you think that the reform will take place? Can I wait before I apply for a lease extension or just do it now?
Okay, I think I dealt with this last time, but I'll repeat it. I'll try to keep it as short as possible. Number one, the announcement made in early January was not a formal policy announcement, it was a press release. Now, those of you who understand politics will know that press releases are largely government and spin. So as a result, there was almost no detail. In contrast, last summer, the Law Commission reported, and they reported separately on lease extension, right to manage and freehold purchase, blocks, and there were over 100 recommendations on each of those subjects. In contrast, the government's announcement, the press release, was virtually non-existent in vagueness. In terms of deadlines, they gave one deadline and one deadline only. They're talking about a future ground rent cap, and they talked about coming in the next session of Parliament. There was no indication whatsoever about exactly what they're going to be doing. They merely gave lots of lovely phrases like, we're going to save people tens of thousands of pounds. There are going to be some changes coming, almost certainly. People we've spoken to seem to think that probably, and again, we're guessing here, but it's an informed guess, there will be no changes probably for another 3 or 4 years. So as to whether you should go for a lease extension now or wait, again, I'm going to go back on the standard thing. It depends on your circumstances. In particular, and apologies if I get technical here, one of the most expensive parts of lease extension is the premium you pay to the freeholder. Now, part of that goes up the second it drops below an 80-year term. So in other words, you've got an 81-year lease, that's a certain price. If you go down to 79 years, 364 days, it's a lot more expensive. That's because of something called marriage value. One of the few things the government did say in the press release is they plan to abolish marriage value. So in other words, if that goes ahead, whenever it comes in, say 3 or 4 years, if you've got a property that's under 80 years at that stage, it might be cheaper. However, if it's still above 80 years, it might make no difference. I'm just using intelligent guesses because none of us know what the situation is, but that's my broad advice. It depends on your circumstances, but that's the real difference. Is it going to be above or below 80 years? Depending, of course, what the government actually do, if and when they do something.
Okay, now, panel members, I do have to say that Wayne has just set the bar in terms of common courtesy. Every time that he wants to say something, he puts his hand nicely up. So, Simon Hodgson, do take note. So, Wayne, would you like to come on board now and have your say?
Only because I'm not really used to these video things. I'm being polite. Wait till you get to know me. Following on from what Tim said, I just add to that because, as Tim knows, I'm the valuer aspect of the lease extension process. And I'm getting asked by clients at the moment, should they wait, should they go? And there's a lot of confusion out there in the marketplace from people who don't understand. So to reiterate Tim's point, it's an important one. If you're getting close to 80 years, don't wait, get on with it, because ultimately things are going to take a while to change. And once all this starts to go through, it was a government press release and a headline. Really, the headline was about where developers have sold new properties on short leases with escalating ground rents, doubling every 5 years. That was the target, but everything else has got mixed in with that, I believe. And as we progress through the process, I think it's going to get scaled back quite a lot myself. But just to reiterate Tim's advice, valuations will change quite significantly, possibly, if you drop below the 80 years. So don't take a chance.
Can I just very rudely come in and say something, not with you putting my hand up? Sorry, apologies, Simon. I think one thing I probably should add is, again, it depends on your circumstances. So, for example, if you're looking to sell a flat, if you've got, say, 55 years left at the moment, unless you extend your lease, you're going to have massive problems with the seller because virtually no one, as I'm sure Simon Hodgson will confirm, will lend to you once you get below 60, 55 years. And as a result, you're only going for cash buyers. So actually, sometimes you may be forced, if you need or want to sell, to actually go for that lease extension. And the other thing we talked about sometimes is freehold purchase or enfranchisement. That's when you come together with some of the other leaseholders and buy the block. That situation, again, may be different. We're finding quite a few people are coming to us, and because they've got problems managing the block. Now, enfranchisement is the best way to take control because you own the block, you can grant yourself a long lease, and you deal with management. But however, it may well be that the price of enfranchisement, again, might be cheaper in 3 or 4 years. So some of our clients are actually thinking of going for the right to manage now, to deal with that particular issue now, and then looking at the question of enfranchisement later, which may or may not save them money. So again, these are very complex things. We can't guarantee an answer, but these are all the kind of things you need to consider. Again, horses for courses.
No, thanks for that. And you're right. Yeah, that was rather rude. So let's move on. A question over to you, Simon Hodgson, because we haven't heard from you for a while. So you may as well get your 3 hours in. James asked, I live in a 3-story block of flats. Do I need to have an EWS1 form? That question originally was from Wayne, but do you know what that is?
I do. No, generally, EWS1 forms come in, and I'm sure Wayne will confirm this, on 18 metres and above buildings. And I don't believe a 3-story building will top 18 metres. Wayne, how would you see that one?
It's not as straightforward, unfortunately, but these things never are, Simon.
No.
You are correct in so much as the building regs and the new regs are kicking in above 18 metres, unless there's a specific reason for to consider a building below, and it can be pretty much anything. So balconies with timber decking, for instance, that are stacked above each other, there's a potential fire hazard there. Even would you believe if a property's been cavity wall filled, masonry walls either side, cavity wall fill, combustible material in the cavity, that has potential to spread. The essential of the rules that have come in are really to stop fire jumping between floors. Yeah. So you're right, 18 metres is the headline, and that's where you really need specialist fire engineers involved. But below 18 metres, yes, unfortunately, it can still change. And the government are looking at the moment between 11 and 18 metres. Okay. And the RICS are just about to release a consultation, which I've been part of, on which buildings should be considered for EWS1 forms, and that should be out to valuers soon. So hopefully, because from mortgage perspectives, obviously it's the mortgage valuer who triggers it when they ask for it.
Indeed. So I suppose, Simon, we would need to throw that question back to whoever put it in. Is there a reason they feel that they need to have that involvement? Is there cladding or some kind of fire risk that they feel that is within the building? If they do, they absolutely should reach out to some kind of fire safety expert to get that checked.
Okay. We can't get that answer tonight, unfortunately.
Can I just throw one thing in there just to clarify Simon's comment, if you don't mind?
Yeah.
Just because that bit's important, Simon. The key thing to note for anybody who's in this situation, I've taken 3 calls in the last week from flat owners who are asking me, can I do the EWS1, which at the moment I can't. Because of a PI cover. Insurance just isn't out there. They're not insuring people at the moment. The government are looking at that. But the key point to note, it's not the flat owner who can request this. It's the building owner or the responsible person, i.e. maybe a building manager, maybe a building owner. So in a block with 10 flats, one of them may want to do this, 9 others may not. It's the building owner who, and as you rightly said, Simon, below 18 metres, how do you compel them to do it when it's not necessarily yet a legal requirement to do so? It's very tricky at the moment, but in the next 2 to 3 months, we'd hope much more clarity on that particular issue.
Okay. That's valid points. And you mentioned about responsible people. Unfortunately, that certainly won't be any of the panel members then, that's for sure. So we just got a question here for Simon Hodgson. Another one for you. Can a typical family investment company really access mortgage finance, or will ownership structure significantly reduce lending options? Is there a way around this? And I think we talked about it last session, funny enough, whereby you've got a family limited company and you've got children on growth shares who are minors, but you've got adult children who are taking some sort of freezer share and getting distribution of dividends. What's your thoughts on?
Well, yeah, we kind of covered it last month. As the complexity of the share structure and company structure grows, so the number of lenders shrinks effectively. So keeping it simple is definitely the best way to get the best lending and finance. But generally, we would advise that you need to get your mortgage advisor and your tax advisor, Simon and Simon in this case, on the same call to work out where the happy medium sits, because there's a spot in the middle where it all dovetails quite nicely.
Great question and great answer. Just sticking with you for a second, I'm going to get Wayne involved in this. This is Paul asks, I have sold my house and expect a surveyor any day soon. My house is 64 years of age, which is still younger than Paul Hilliard, and it forms parts of surface. There's a surface cracks between the ceiling and the walls where the plasterboard joins. Is it worth getting a decorator in to cover these issues, or does the surveyor expect to see surface plaster cracks, nothing structural, thank goodness? Let's start with you, Simon, and then we'll go over to Wayne.
Right, okay. I guess I would say this. Cutting aside any reporting back to the lender, you want to present your property in the best possible condition for survey. Yeah, that's going to give you the best chance of the best value, the quickest sale, etc., etc. So potentially a quick bit of decoration and caulking might be the answer. However, I'm sure Wayne's going to come in and say, Simon, that was an absolutely terrible suggestion. How very dare you try and pull the wool over us surveyors' eyes before we come in. Anyway, let's find out from Wayne, shall we?
Over to you, Wayne.
First, I probably won't say that, Simon, to be honest. I think I'm going to agree with you to a degree. First of all, I'll point you in the direction, the question, in the direction of the course I've written, How to Sell Your House, because that tells you all about this particular thing. It's available on my website. But putting that to one side, so firstly, prepping your house before survey, vital. It's important that you do prep your house, and by the sounds of those cracks, it's often that you'll see a crack between a stud wall and a masonry wall, or vice versa, or whatever. And as you rightly say, a surveyor will generally look at that and hopefully say it's not significant. But we don't know that because every property is different. Now, when I say prep a house, though, what I always say to people, and I wish more estate agents, I don't think there's any on this call, is there? But I wish more estate agents would do it, and also developers, because developers who refurb houses seem to miss this. And what, to me, it's about honesty. I personally believe be open, honest, transparent. It's the best way to be. Now, so if you have covered some cracks, then why not tell the buyer? I've just painted over some cracks up there because they were just whatever. Be open and honest with your buyers, because ultimately, if you don't do it that way, what I say to my clients when I advise them about keeping the moral high ground, if you don't keep the moral high ground, if you do get found out, then trust is destroyed, and it's harder to negotiate with somebody when they don't trust you. Now, I say about developers because I do a lot of refurb properties around here, and I go in and I find things that developers cut corners. Everybody does it. I get that. However, by not having somebody come in after they've done the development, before they put it on the market, I go in then, find these corners that have been cut, and it might be something really simple that I report to my client, but then because they thought they were purchasing a refurbished property, now they've lost trust in the developer and they start to question everything. And property is purchased with your heart. So as soon as you feel that it's not right for you, it's not right for you probably. So I would suggest if anybody is going to be doing that, prepping the house, do it, yes, fine. And they should prep the house before survey, but trying to hide things, I'd probably say not, because I think personally, if it comes back and bites you, it will bite you harder than if you were open and honest at the outset.
No, thanks for that. And we're going to move over. It's funny enough, you should mention about cracks. Some of the panel members was trying to do some touch-ups on their Zoom, so it does hide theirs. But we'll leave that there, shall we? So moving on to Teresa. What I'd like to do is ask you a question. Actually, this is from Brian. Brian's asked, if a tenant is on an LHA and stops paying their rent, is there a way to get the rent paid direct from the housing provider?
I was wondering if I would manage to escape those scathing remarks you've been making, but yes, I will admit I did touch up my video before I came on. But yeah, so to answer the question, so if you've got a tenant who is on, we're calling it a legacy benefit. So it's a housing benefit which was paid through the local authority. So if you have, I mean, I've got a tenant who's on a legacy benefit and his rent is coming through from the council. So if they're in rent arrears, then you need to contact the council, the private sector housing team. It could be called housing options, and basically just explain the situation with your tenant and kind of do slip in there that this tenant could be at risk of being evicted. So at risk of being homeless. So then the homelessness prevention policy will kick in at the council and they are more likely to help you. So that is a bit of a top tip there. But yeah, so if you've got tenants who are not on legacy benefits, who are on the new universal credit benefits system, then you can apply for a UC 47 on the government website, where you can apply to have rent paid direct to yourself or any rent arrears paid in increments over time back to the landlord as well. So yes, that's another bit of a tip there as well.
I'm going to stay on with you. And for my comment, I will have to say, look, you are beautiful people. And just because my face looks like a bag of spanners thrown down the stairs, set on fire and put out with a shovel, it's okay. I'm all right with that. So question has actually come in for Teresa and for Tim. And it says here, I'm representing a vendor who has 2 flats in the same block. I have sold one of the apartments and the tenancy has come to an end in this flat. And the letting agent has moved the tenant into the vendor's other flat without the vendor's permission, without a tenancy agreement, and no rent is being paid. Wow, we'll come on to that. It carries on. I have a buyer for the second flat and we are selling them with vacant possession, which it clearly isn't anymore. Where does the vendor now stand, given that the person is now living illegally in this property? Teresa, Tim, Teresa, you go first, Tim second.
Yeah, this is one of those situations where it's either a complete nightmare or it's all okay because, you know, it's all been sorted out and the tenant's just going to move on. So what I heard was the tenancy ended in one flat and then they moved to another. So one question I would raise is, so this is where it could turn into a complete nightmare. So did the tenant who's been moved on, have they actually surrendered the tenancy? Did they actually put in writing that, you know, they were leaving that property? Because otherwise, you know, that could be classed as an abandonment. And the fact that the tenant's now moved into another property without a contract. So if the tenant's not going to be willing to move, then yeah, this is where you do need to get legal advice and also find out which redress scheme the agency is a member of, because clearly they're acting very unprofessionally and, you know, unlawfully as well. So, you know, that also needs to be reported. So yeah, it's either going to work out well. So maybe the tenant's going, oh yeah, I've sorted it out with the agent. I've got somewhere else to live, and they're just going to move out and disappear, and it'll all be okay. Otherwise, it could be very, very difficult. So I don't know what Tim's got to say about that.
I'm not a landlord and tenant expert, and so anything I say is very much tempered by that. But my instinct is this is the problem. Although it's obviously your problem, whoever is selling the property, the actual issue should be thrown back at the agent. It sounds like they've acted appallingly and almost certainly, as I said, in breach of their own arrangements, etc. So I think the first thing to do is get them to sort it. Now, if that fails, then there are obviously there are internal things in terms of complaints within the estate agency, possibly a legal action against them. I think the first thing is they've created the problem purely, get them to sort it. If that is sorted, all well and good, but that's the first port of call, failing which you may well then need to take legal advice. But I think it's really a problem that the agent has created. Make sure the agent takes some responsibility and sorts it, and hopefully that'll do the trick. If not, as I said, you may need some advice.
Great. So now this is wonderful. This is why I like the panel members so much. Simon Hodgson on Zoom has just said, Paul Hilliard's been quiet tonight. And that's because we look after each other. And I've been keeping Paul Hilliard quiet because I know he's slightly older. He can't do as much energy as everyone else in the session. So, but here's a question for Paul Hilliard and for Bronwen though. So it's from Tony on YouTube Live. So hello, Tony. He says, what do you guys think of service accommodation industry, knowing full well if the impact of COVID and post-COVID caution people will want to take they want to take caution using traditional hotel accommodation. I mean, what's your thought? I think that we're ready for a booming market in the UK, aren't we? So what's your thoughts? Let's go to Bronwen and then to the old age pensioner.
Okay, ladies first. So serviced accommodation can be used in different ways. It can be holiday let, it can be used for contractors. We've certainly been quite busy during COVID with people who are working in the area and they can't stay in hotels. They need it self-contained. They're their own little bubble. But certainly now there's light at the end of the tunnel. There's some dates in the diary. People are starting to think, I've got to have a staycation. I need to escape. Then there's definitely opportunity coming forward in the summer. So what was the real question about? Sorry, I've forgotten.
Do we think that the service accommodation is a good market based on the fact that it's COVID, people are a bit more cautious, etc.?
Yeah. Oh, it's an excellent market, and it's self-contained and therefore it's easy. So it's only if you're going to rent a 20-bedroom place with lots and lots of friends that coming from different parts of the country, then obviously that's your risk, and whether that's allowable or not. But on the whole, service accommodation is a great market. Yes, during COVID, people panicked, but as I said, if you can pivot a little bit, there's certainly opportunities in other areas. It's also very tax efficient, isn't it, Simon? So as a strategy. But yeah, Paul, I'm sure you've got lots to add to that.
Thank you. Sorry. The thing I'd suggest or be cautious of is that it depends what you mean by service accommodation, because as Bronwen suggested, it can actually mean anything from letting your accommodation for, dare I suggest, even 1 hour to many months. So it'll cover the whole aspect of that. And obviously I would not recommend the 1 hour letting, because it could be for an illegal or immoral purposes. But what I would suggest is that...
Some examples. Sorry, I'm really lost on that. You're going to have to give me some examples.
I need to do a webinar on that subject. It's a whole area.
If you remember, Simon...
Okay.
Let's move on. That was not a nice thing.
But yeah, it's... I think that what you need to remember is that service accommodation is a business in itself. So you need to go into it open-minded. You have to have the systems. If you don't have the systems, it becomes another job for you. So just bear that in mind. So based on that, make sure you get educated first before you go into it. Then the next thing to look at is, where are you looking at? Is it, where's your target market? You then find out where your ideal location is for your target market, and then take action. If you're looking at staycation, then obviously anywhere near the coast is going to be ideal. But as I said earlier, all my service accommodation properties in this country are all based in the Midlands, so about as far away as you can get from the coast. So my target market is contractors or families or insurance loss claims. So there you go.
I'm just going to go across for both of you, actually, Paul and for Bronwen, because you know that area quite well. And someone's just asked on YouTube Live, so Ivan's asked, what is the best property investment strategy in expensive regions such as the Southeast? And you just touched on that. So what's your views in terms of the best investment markets in the Southeast as an example?
Yes, it's a great question, Ivan. And again, you've got to think about what your aim is. What are you trying to achieve? What is your return on investment that is best for what you want to achieve personally? So when you say what's the best strategy, for what purpose? So I don't want to throw it back at you, but personally, the best strategy I've had to work well for me initially was a house of multiple occupation, because it gives me the highest return on investment. Now, that was when I first started, because I was working, I wanted to replace my corporate income. But once I'd done that and left my job, I've moved into different strategies, and that's because I've learnt more and I've understood the market where I'm investing much, much better. So I do guest houses, I do accommodation for council on a short-term basis. Now that could be termed SA as well, Paul, couldn't it? But they tend to be larger properties. So I rent the rooms to the council book the rooms for the client stays for 2 weeks up to 3 months, and I charge a per night rate. Now that's the best strategy for me. That's been a fantastic business, but it's not a residential investing business. It's a trading business, and it's quite complex. So yeah, depends how long you've been learning, how much you already know, and how much risk you want to take is my answer. Paul?
Yeah, so you've got anything from service accommodation down to HMOs with co-living coming in between. So co-living is another new fad that's been around, 2 or 3 years now, mainly in the biggest urban areas, but certainly it's, I'm aware that people are using it in the Southeast, so definitely one to be aware of. As regards, what return on investment you're looking for, it's again down to your overall strategy. What's your attitude to risk? So always bear that in mind. And as I said earlier about service accommodation, don't go ahead and get yourself another job. That's the last thing you want to do.
Wayne is again very politely, Tim, put his hand up. Wayne, would you like to interject with your thoughts?
I was just going to add, living in the Southeast, because I know some of you are from up north and etc. Depends where in the Southeast. But what I was going to say, and maybe I'm wrong here for all you more experienced property investors on the panel, but if you're starting off as a property investor, then whether you invest in the Southeast, Southwest, Northwest, Northeast is fairly academic, as much as where is it in relation to where you are based. So if you're living in the Northwest and you're thinking of investing in the Southeast, well, you straight away cause yourself a problem because you're hundreds of miles away. So if you're in the Southeast, then stay close to home. And there will be opportunities depending upon where you are in the Southeast. Well, that's really what I was going to say to a new investor: stay close to home. If you're not in the Southeast, don't consider investing in the Southeast as your first port of call, unless you find a great deal.
Great question. Great answer as well. Simon, you've got yourself unmuted. Did you want to ask something or put into no? No, he's just looking shell-shocked. That's fine. There was a question from Paul Honeyman, and I apologise, Paul. I'll say this live on all the various platforms that we're now on. So here's a question. So he says, is it possible to submit a question for consideration this evening, please? Here it is, Paul. So hopefully you'll enjoy the answer. It's a follow-up one to the one that I asked previously. So here we go. So I have done a deal with a vendor who wanted to move on a specific date. She accepted 111,000 on a delayed completion. I have paid her 11K on exchange last week, with the remaining 100K payable in 4 months to give me a chance to complete the refurb. Completion set for the 18th of June. Current RICS valuation is 125K. Estimated GDV on completion is 180K. Budget for the works is 30K, which I have, and I've already paid her 11K deposit. Refurb now well underway. Can I bridge the 100K I need to complete the sale and then refinance to a buy-to-let mortgage within the day/hour to achieve 75% of the 180k valuation. It would be great if someone could give me a point of direction of products that would work or offer an alternative solution which I haven't thought of. I'm going to raise that with Simon Hodgson clearly, but if Tim's got any thoughts on that one as well, do interject.
Okay, right. Yeah, well, the short answer is yes, there is a structure. Can it be a same-day remortgage on the hour or on the day? No, that kind of window of opportunity disappeared back with the credit crunch. However, depending on what the person currently owns at the moment, there is a way of structuring it with certain lenders in the marketplace that will allow them to complete on the open market value, give them 75% of the open market value. However, I'm not sure I particularly want to talk about which lenders that they are and who will do it, because they don't advertise it, and that's my intellectual property. Thanks very much. Please reach out. I'll tell you how to do it if you come and talk to me direct. But yes, without doubt, you could complete at open market value without even having to use a bridge in certain circumstances.
That's great. And Tim, look at this. When you are setting a perfect example, I want you in every single session we have. Tim, you've got your hand up. Why don't you have your say?
I just thought I'd raise my hand to say I've got nothing to say. Is that polite enough?
That is shocking. Absolutely shocking.
Simon said it all. I couldn't add anything more.
Disgusting behaviour. So, anything from you, Tim, or was that you done?
No, I'm done.
Wow. So there was a question on the panel from the WhatsApp chat talking about limited companies, and there's various stuff that's going on in here. This is Scott asks, and it's various company structures, and they talked about doing property investments. They've got property sourcing, service accommodation, holiday lets, etc. There's quite a lot going out in this, and they talked about what are the specific tax advantages of letting property in this way. And it was talking about service accommodation as well. When it comes to using tax and limited company structures, as Tim would say earlier, and Slopey Shoulders Simon Hodgson would say, it's very specific questions, and those answers really needs to be tailor-made for you personally. So use of limited companies, it's impossible for me to say, this is what you should do, because I don't know your circumstances now. And something that accountants don't seem to ask very well at all is, what are you likely to do? What are you likely to be doing in 5 years' time? So we take Bronwen for an example, corporate world, moved into property, and then going on terms of being a full-time property investor. Now, if someone has kind of asked that question, 5 years ago, and people are saying, well, should I use a limited company straight away? And I'm looking to give up my job and then be a full-time property investor. For some people, it doesn't work. And I'll allow Bronwen to step in, because obviously we've been having many conversations about this. But a limited company it's not always required, is it, Bronwen?
No, it definitely isn't. And we've got a great webinar where we talk about just this topic. And a lot of my clients, of course, this is the first thing they say. They've been on social media and everybody is advising them, oh no, you need a limited company. Now, people advise things in social media sometimes for the right reasons, just because it's their situation and they think they're helping. But it isn't actually a good idea, certainly not when you're starting out, because it's harder to get mortgages, it takes longer, it's more expensive. And it's more complicated. You start paying for a limited company when you're just starting out. So I certainly don't advise it, and certainly look at the long term. What are you intending to do? What's the purpose of your investing? And yeah, Simon and I have talked long and hard over the 7 years at different stages, and making sure that we were getting ourselves in the right situation for the future, because we've got different businesses. So if Scott's asking about, well, I've got a serviced accommodation business, which I'm hoping to build into something really big, and then maybe I'm doing some refurbs and flips, they need to be in different companies because they're different businesses. So that's a different question to the tax question. So yeah, structuring your business for the future is really important. Otherwise, you get into quite complex accounting as well for the different businesses. So there's two different elements to that, and I'm sure Simon will help, but I can certainly share that webinar with anyone that wants it.
Yeah, if you've got the link for that, Bronwen, actually, why don't you, if you can find that URL, if you find that and put that into Zoom, I'll share that on. Anon asked a similar very question on limited companies. My wife and I currently own properties in both personal names and in a limited company. We are considering emigrating abroad, which is what Bronwen's done. She's not coming back. But we're not sure the potential impact on the current and future mortgages if we are non-UK residents. Should be pricking up here, Simon Hodgson. I presume that those held in a limited company will be fine as it's a UK company. For personally owned properties, will we still be able to get mortgages? Are we going to be able to be seen by lenders as foreign investors, therefore need to pay high interest rates? What's your thoughts, Simon? Because obviously we've talked about foreign investors, whether coming from America, Hong Kong, Dubai. Let's spin it. What's going on with the mortgages
from this perspective? It's not too difficult to sort out. So first of all, they've owned the properties in the UK. They've registered and paid and registered the rent with HMRC and use your accounting services, hopefully, Simon. So therefore, they've got a UK tax presence. They've got a UK bank account, UK credit profile, and UK credit card. So most lenders, or there are enough lenders out there to be able to do that. Every mortgage in the limited company will need to change to an expat mortgage. Now that might still be with the same lender and it might still be the same rate, but you do need to declare it to the lender rather than try and hide it from the lender. Because if the lender then finds out you've hidden something from them, their first thought is, well, what else has this person not told us? So you always need to be upfront. Those in personal names, potentially there might be an interest rate change. It really depends the type of property and the loan to value on the property. If the loan to value is not massively geared at 75%, but it's a bit lower, then it's quite possible to take it to one of the high street lenders. So your Barclays, your Lloyds, your HSBC, and still get the same kind of rate. But it really, so from that perspective, it's not difficult. If you've moved abroad, you then want to start investing in the UK, but haven't invested, that's when it gets a bit more difficult.
Unfortunately, I'm going to have to, hopefully you've had a drink of water, because the next few questions are yours as well. Tammy on LinkedIn has said, very timely, time to switch over mortgages on a buy-to-let. What's your thoughts? Keep to the same or enjoy the rise in property value and pull some cash out? Loving the springtime, see you find experts tonight. So hopefully, Tammy, you'll wash out. In fact, I've just replied to you on Tammy. So what's your thoughts on pulling cash out? Is it now the right time, Simon?
That largely depends on what you want to pull the cash out to do with. If you are looking to take prop equity out of your portfolio to reinvest, then definitely now is a great time. We still don't know what the rest of 2021 is going to look like, the second half, the third and fourth quarters. There is the potential for a slowdown in the property market, a market correction. So if your idea is to expand the portfolio, take equity out now whilst values will remain high. Cash is very cheap. If it's in your personal name, there are interest rates out there, for buy-to-lets from 1.2 to 1.3%. Limited company from 2.79%. Cash is cheap, really cheap at the moment.
And one final one for you, Simon. When it comes to buying properties and being foreign, is it better to be a foreign person owning properties in your personal name, forget tax, just for mortgages I'm talking about here, or to have them in a limited company? Where you can get the best rates?
Best rates, definitely personal name.
Definitely personal name. There you go, guys. Hopefully you can hear that. Thank you ever so much for that. We've got some questions. Although I've got one more for you, actually. Regards limited company mortgages. When getting a mortgage for a new property purchase, are lenders' decision affected by the number of existing mortgage companies, or has it got to do with the multiple vendors? So I guess Stephanie is asking the question about, in terms of, first of all, how many properties you have and how many mortgage providers you're using. Does that affect how lenders might see you?
The number of lenders that you use, no. However, if you've got 28 properties or 30 properties in your portfolio and you've got that many different lenders, I question how that could be, to be fair. In terms of, does the amount of properties that you own within the limited company affect the rate you get? No, because most of the limited company lenders are experienced buy-to-let landlords and portfolio lenders. So they have a product that covers owning 1 or 2 and goes all the way up in most circumstances to either 25 or 30 or a maximum portfolio exposure of sometimes 5, sometimes 10 million. So within a limited company, no, but if you're borrowing in a personal name, absolutely, the amount of properties you own will affect the rate that you get. As you breach 10, you go into full large portfolio lending, and the rates generally start currently at 2.99.
Okay, that's a good question. There's a quick question that's coming in, and I can answer this pretty quickly as well. Rob asked a question about, I've got a holding company in place and a subsidiary, and I wish to transfer the dividends from the subsidiary to the holding company. Is it tax-free? The answer is yes. If you're moving profits from one company that is to another holding company, then the profits will be the dividends will be tax-free. The only tax you will then suffer is if you're extracting money from that holding company. So just to give you an idea about that. Simon, sorry to pull you in again, but Mohsin's asked a question now is, what is Simon Hodgson's opinion about getting a mortgage in a smart company structure? I think we've talked about that, so let's move on from that, because otherwise we could be repeating ourselves.
I don't want to accept the other panelists. The other panelists need a question.
I know. Thanks for telling me how to do my job as well, Simon. That's much appreciated. So we're going to get Tim on board now. So Tim, Liz has asked a question. Hi Simon, with a probate, I'll get my teeth in. I know how poor Hilliard feels like now. So hi Simon, with a probate property inherited by 3 siblings, what's the best vehicle to hold it in? What's the pros and cons of holding it in a limited company or LLP? Now Liz, I'm going to answer that from a perspective of, it really does depend on your specific tax situation and the tax situation of your sisters. But Tim, do you see any issues with, probate properties being owned by 3 people? I never like it, to be honest. There's always something that tells me that people will fall out eventually.
I think it's not just probate property. The more owners you have of a property, the more possibilities there are for disagreement, and particularly if everyone's got a say. One of the big issues we have with property investors is where there are 2 or 3 different people in a company. And that's why some are very foolish who don't go ahead and get a proper shareholders agreement, because what they find otherwise is often there is no deadlock clause. So in other words, if they can't agree, what happens? And there was a classic one recently with a guy who should have known better. He's quite experienced in property, he's owned property, advised people on property, works in property, and he as partner simply had cut corners. And although normally you would have all the agreements, didn't have a bespoke shareholders agreement, and they fell out. One wanted to sell, one didn't. All sorts of problems. So I suppose from the company point of view, the reason to have a company, of course, is limited liability. Well, that's quite good. Tax issues purely, you're depending on circumstances with Simon. But there's no problem with 3 people holding a property. But the issues really are who's going to make the decisions. If you want to have an extension, who's going to decide? If you want to sell it, who's going to decide? So I think that's the clarity. Actually, what do you want to do? Who makes the decisions? And then really, frankly, once you've done that, the legal format simply follows your decision.
No, that's a fair question. I always find that whenever you go down streets and you see boarded up properties, my first instant reaction is, I bet that house is in probate and the brothers and sisters are fighting over what's happening with it. Bronwen, what's your thoughts?
Well, no, I was just going to suggest that rather than just have one property for the siblings, is to get them one each, because the more properties you have, the greater the asset value. So, don't just try and share it in that way for the reasons that Tim's just talked about. It's too complicated. And in fact, even start to teach them, help them learn. Certainly my son, who's now 27, who's now a owner of his own property, he was a lender of his inheritance to me for an HMO. So he got interest on that, and it was a brilliant way for him to learn. You know, he went round the property as if he was an investor, asked all the right questions. So, you know, if you're talking about kids, start educating them now, start getting them involved, and make it fun as well.
That's a good point to make as well. Now we are coming to a close, in fact. So, Bronwen, would you like to give us a bit of a rundown as to what your thoughts have been? Has Tim and Simon been acting accordingly, professionally, and behaving themselves?
Well, I'm very impressed because last time I couldn't make it because of where I was in Africa. And yes, we've got them back on their best behaviour, haven't we, Teresa? You know, but no, where does the time disappear to? We've covered so many different topics, and thank you to those that asked questions in advance, because I think you'll see that we managed to get through pretty much most of yours. And if we didn't answer your question, do come back to us. Do go to that YouTube, put your question in. We all have access to that and we can answer it. And equally, if you want to email any of us, all the details are in there, so you can come back to us individually. Obviously, you know, all of this is free. We enjoy doing it. We are experts in our own right, and we all work with each other. And I think that's what was great about starting this a year ago. So yeah, just coming back to the fact that it's our birthday. Yeah, thank you, Simon, for being the host of this, because it really does hold it together, doesn't it, everyone? Because it was no way I could do that and look at all these different feeds and questions. So it just makes a huge difference. And I must admit, I've learned loads as well from it. I don't know about everybody else, but I'm like, wow, that's such a great question. I don't know the answer to it. So we're all learning as we're doing this. So yeah, fantastic. Thank you to everybody for their contribution. Welcome, Wayne. You know, this is your first of many, I'm sure. I just want to let people know as well that I've done a spotlight on the experts. So I've had one-on-one webinars with pretty much everybody. I think it's just Wayne left now. Did Teresa just yesterday. We did a spotlight on safety, didn't we? Which was really, really interesting. Again, learning more and more, because the NRLA have got so much information, courses. You know, if you're not sure about fire safety, electrical safety, these are the topics we talked about yesterday. So there's a link to my membership page that Simon's put in the system. So if you want to be notified of any of those spotlights, Wayne, we're doing ours on Thursday. That's not going to be live. I'm recording it, and then I'm going to make it available. So come onto my membership page. You'll then be informed when those new spotlights are available. And if you want any of the others, just let me know. So yeah, I think that's pretty much everything. Thank you, everybody, for your contribution. Really, really enjoyed tonight.
And just to finally say, to Tim's much delight, the next event, if you want to put it in your diaries, will be the 5th of April, which will be the first Monday, as always, but at least gives Tim a few days to get his reporting all done for this show. So thank you.
It's not the 1st of April, that's good.
Yeah, so for the panel members, stay on, so don't run off on. But for everyone else, thank you and have a great evening.